All right, today is September 9th, 2025. We got coaching with Kevin Johnson. Let's go ahead and give him a call. Let's go ahead and call him. Kevin, it's John.
Hey, what's up, buddy?
Hey. So what happened with your plumbing? It failed.
Man,
Did it fail under the slab?
yeah, slab leak. They fixed. I got a plan. I do insurance. Home insurance doesn't cover piping, so I got a plan 4 years ago, and piping broke, and they covered the piping, and now the insurance take care of some of the house stuff.
So you got the FPL plan, right?
Yeah, home serve, yes, sir.
And that's like what, $6 a month or something like that?
13 to 20.
13 to 20. And
Yeah, are you in Florida?
yeah, I'm over here in Cape Coral.
Nice, man. Nice. Okay.
So
Yeah, I'm over in Miramar. Okay.
So how much did they cover?
Man, they covered 2,500, and I came out of pocket like almost 500.
So they covered 2,500. Was it more than 2,500?
Yeah, it was about 29 and some 29.83, something like that. So I had to come out of pocket a little bit.
Right.
But thank you, Jesus. I had that plan because, man, that thing saved me. I mean, they did a good job, man.
Right. Would they have covered a whole house repipe?
No, only 2,500 a year, unfortunately.
Oh, so there's a limit. All right.
Yeah, the guy, I know somebody got it done for 10,000. The guy quoted me 16,000. I think I get 10,000. So, it is what it is. But we got approved for financing a new roof on my house is 45 G's, man. Woo.
Yeah. You can shop around, you know that.
Yeah, I mean it's tough. In where I live, man, everything's so expensive because the roofers they got so much business. It's crazy, man.
Is it a tile roof?
Yeah, it's a tile, but I'm gonna get a metal roof.
Oh, okay. All right.
Longer.
I understand
Yeah,
that.
because I do insurance in Florida, home insurance. The metal roofs are really top notch,
Well, the new ones are.
Yeah.
Yeah, the new ones use a much better gauge of steel.
Exactly.
Yeah.
So the way they built my house, there's one little area that's down, and it tends to leak there. So if there's metal there, hopefully I won't have that issue. God willing.
Right. Hopefully I got a cricket, and the last time we had the roof redone, we got a cricket on each side, and right there where the cricket was,
yeah,
was where the problem was.
Yeah.
It's like a little catch where the water runs into the wall and the roof at the same time, and then it gets deflected back onto the roof, back onto the slope, and then it continues its path on down to the gutter.
Awesome. Well, whenever you get a chance, man, let me quote your home insurance, buddy.
All right. Right now, I mean, I got an older home, so I'm with Citizens, and it's about the only one that's gonna take care of me.
When? How old's your roof?
Well, the roof is not more than I think 10 years old, but I mean the house is built in '88.
Okay.
We got Frontline. I don't know if you ever heard of Frontline.
You know what? Frontline's really good, man. You're with a good company. I would tell you to stay with them because every year I believe they take off your wind deductible or something like that.
Yeah, we've been with them for 5 years.
Uh-huh.
Then they reduce the out of pocket for hurricane by
Yep.
20% per year. They're out of Lake Mary, Florida,
Yeah.
and we're down to zero deductible for
That's
hurricane.
awesome. Yeah, I've tried to get Frontline in the past to represent them, and they're just tough, man. They're tough. Where I'm at, they won't write, so it is what it is.
Right. Well, we were fortunate to find them.
No, you were really blessed.
Yeah.
Really blessed, man.
Yeah. Well, they just went up like 12%.
That's nothing, my friend.
Yeah, I know because Citizens goes up much more than that.
20.
Yeah. And
Yeah.
Citizens, yeah. All right, so
But
tell me how I
man,
can.
I really like the way you operate. I'm learning so much from you. I mean, like I said, the 10-minute uptrend, that thing rings in my head when I'm trading a lot.
Okay.
I've actually started on a 10-minute time frame. I see what you're doing, and I see the options are a better fit. I mean, options. If you buy an option, you got to define risk, correct?
Well, it doesn't matter if you buy a security or an option. An option just gives you leverage.
Exactly, but you're limited on your risk. Whereas futures, I mean, that thing can keep going down and down and down because of, I guess, margin or leverage or something.
Yeah. Well, on futures it just continues to drop. But futures also have options. You just haven't seen them yet.
Okay, okay. No, I mean, I like your system is very well defined, and I really appreciate it, man. I really appreciate you, dude. Um,
Did you get some of those 650 calls today?
no, I had to step out. I just had too much work today,
Oh, okay.
unfortunately, so I had to step out. But I put some money in Fidelity. It took forever, and now I'm just trying to say, oh, should I go with someone else? I mean, do you use TC 2000 as a broker?
No, no. I have futures that I use from Apex,
Okay.
and then small account in E Trade.
Okay. Perfect.
Yeah.
Um, yeah. I mean, and me and Craig. I've known Craig for 20 years, man. We used to train martial arts together. We became friends.
Okay.
So Craig's a really good guy. He's the one that brought me to the group, and then I found you, and then I brought him over to you because I told him how much he would learn from you, and I mean, it's really eye opening the way you do it. I mean, I used to trade like this, doing forex, just playing around with a demo account, doing back testing, but you've really got it down to a science because you're doing it in you know the other guys talk about a 3.8 and they know the 3.8, I'm sure, better than you, but you just do it over and over and over, and it drills in your head on how to do it right, how to do it right, how to do it right. You know what I mean?
Yeah.
I mean, I'm trying to catch how you load up. Like I said,
It's not all at once, Kevin. Okay. It's just I put in something and then I start bidding underneath it. All right.
yeah,
Because it most all the time there'll be like a lull in the buying, and it'll have like a dip, and
it'll
it'll
feel
dip
you.
down and kind of fill me, and it'll bring my cost average down. I just don't want it to dip too far, but that's right. Yeah, because then you find yourself too much in the red. But that's what I like. I like to put in some, and then
Yeah,
and then put some underneath it. I already know it's probably not going to stay where I got it because I probably paid too much for it, and I know
yeah,
that. So because of that, I don't do 100% of my position. I'll take like 10% and just that'll be the starting point, and whatever when it dips down, whatever I get filled is what it is, and then if I get another pullback, I'll add in more on that.
well, and the way you do it, in that you take quick profits. Sometimes you let other stuff run. You could take. I mean, I was doing it yesterday. I did really well. Then then I was mistiming the market, which I shouldn't have been doing because, trying to guess the market, you get stupid. But I'm learning so much by watching you do it, and there's good people in there like Tex and some other people where you can really learn some things from them. But it's really eye opening.
It's really eye opening to see somebody trade it right in your face, right?
Yes, sir. I mean, Craig was in shock. He believes like Doug. He's like, oh, I can make more money holding it, buying and holding it than day trading. And then he came over here. He was like, his mind was blown, man.
Really?
Oh man. He's going through some things right now with a family member, but
right.
His mind is blown, man. His mind, and it's good because you're making him see what's out there. I kept telling him, man, day trading you can make more money. You just got to be more active,
Right. Like today we took those 650 calls, and Stu, one of longtime members, Stu, made 140% on his trade.
Wow.
Some people wait 10, 20 years to wait, for Ford to double or for the dividends to finally pay off. 10 years, okay? And Stu ran in there, and look at Tex. He had some calls from back in August, all right? And he's been waiting, and today's the 9th of September. Okay, Stu went in there today, and in 2 hours, he made 140% on a position.
Thank you, Jesus.
Right? In what? 2 hours. Not 10 years, not 1 month, not 2 months, 2 hours. And it's all about knowing your 10-minute trend, seeing a path to the 650 so you know it will double. I mean, actually, if he'd have held those...
Yeah.
I don't know if you saw the 650 calls. Well, they rocketed at the very end of the day at 4:15.
Yeah.
They rocketed up to 88 cents a share. Woo. I mean, me and Stu were lucky just to get out at 40 cents and 44 cents.
Yeah.
I mean, 88 cents a share. That would have been like a
double whatever you.
That'd be like a triple bagger, quadruple bagger up there.
Well, and that's the thing with these options that I didn't know is that, I'm learning. I messed up. I bought some that were premature. Like I bought a 1 DTE, a 0 DTE. So I'm learning about the days. But, man, those things are incredible because you can really – you're risking, but you can make so much money. It's insane. I mean –
you can if the market's moving in your direction. But if it moves sideways, you will – if you catch the evening webinar from me, you'll see I show you where the decay is happening faster than the 10-minute uptrend. And unfortunately, the decay happened faster than the trend, and it was very hard to make a profit when the decay is happening faster than the uptrend.
Okay. Yeah, I mean... And that's where, like I said, I'm trying to get. When it pulls back, you put money in. You set up these. I forget what you call them. You set up these things, and then they move down. They hit you, and then hopefully they go your way. Which most of the time, I mean, you're good at understanding the market. I mean, the S&P very well.
It's a 10-minute uptrend. Okay, if my 10-minute uptrend is still intact, I will keep my grid, all right? The grid of buy orders and a grid of sell orders. I'll keep those are intact. I'll kind of tighten it up a little bit, but I want when they pull back, it runs into my grid or my net of buy orders, so it triggers me every time they drop into it, but and I get filled.
How do you determine your out of the money calls? I mean, out of money, whatever.
Well, on those, the 650, I saw a path by the end of day to 650. I actually saw one to 651, which I did call out in the room, and I said, I'm buying some 651s, but then price just went sideways, so of course they started to decay rapidly. So I had to dump the zeros.
Okay.
All right, but they actually did do well in the last, 20 minutes. You saw price rip. I was trying to get out, but my internet was kind of flaking out on me. I had like probably $2,000 worth of unrealized gains that I could have taken. I only got out with 500, so I left 1,500 on the table that I wanted to take. But
yeah.
And
who do you got? Comcast or AT&T?
I've got Verizon. We don't have internet out here, so So I got the Verizon hub, where it's kind of like a phone, but it shoots the signal to this box, which winds up being a Wi-Fi box.
Man, Verizon has too many of these little shady areas. You haven't tried like AT&T or something?
I've tried AT&T, and let me tell you, they'll raise the rates on you when you're not looking. Verizon's been fine with me so far.
Okay.
They have not done any shady shit. All right, and I had AT&T, and I used Google Fi.
Okay.
And let me just say that actually AT&T and Google Fi happen to use the same towers, or I had T-Mobile and Google Fi, and they use the same towers. So when the hurricane came through and knocked out one tower, it wasn't any better to switch to my phone to try to get internet because it was the same tower.
Yeah, man, you guys been getting hit by hurricanes like crazy. I mean, we used to get hit all the time, but now they're going to your side.
Yeah, we got our share. We got Ian one year, and then Milton came close to us. It didn't landfall on us. It got the landfall closer to Tampa than it did for us, but it came sweeping by us. It was enough to push some stuff around.
Yeah. No, I have a lot of customers out there out west, because when I was an Allstate agent, man, you couldn't write auto in South Florida, so you had to go out west. But that's awesome, man. That's awesome. But so you load up and you say, hey, look, I think these are going to come back down and hit this area, and then when you put in the orders, if they get, you put orders all around there. So hey, you may not get filled here, but you go filled there. Correct?
Right. Exactly. I see a 10-minute uptrend. I start placing orders underneath it for it to kind of, when it does pull back, it kind of like reloads into my net. I get reloaded because it falls right into my grid.
Well, and here's the thing, because I'm so new to options. So they're out of the money at that time, but then do they come in the money when it hits them, or how does it work?
The 650s, and price closed today at 415 around 651. So I had 650 calls that were out of the money, and by the end of the day they're in the money. Those are the most perfect options. Are the ones that are out of the money when you purchase them. And then the trend takes them up, and now they're in the money, but near the end of the day. Actually, the sooner they get in the money, the better off you are.
Okay, so you're purchasing them prior to the move.
No, when the move I have to have a 10-minute uptrend. Yes. It's just if I see a bounce coming, like support is holding, all right, I will start to nibble on something that I think will probably make its way back up to VWAP.
I see. Yeah, the VWAP. That's what I was wondering. Is you could use VWAP like a weekly VWAP.
VWAP is a thermometer. It tells you when the institutions are buying and when the institutions are selling. Below VWAP, they're currently selling. But if you see price come off that low and head back towards VWAP, it's possible that now they're done selling, they're going to start buying it back up.
Okay.
Believe it or not, Kevin, you'll see sometimes in the market, you'll see a big, like a blast down in price. Like they'll just dump it, all right?
Yeah, yeah.
Let me just say this. The same cats that are selling it are the same ones that are going to buy it up 10 minutes later.
Yeah.
Okay?
Yeah.
That's manipulation.
Yeah.
It's not somebody saying, "Oh, I think this is the high, so I think I'm going to get rid of all my positions up here." No, that's not it at all. All right?
Yeah.
It's the same guys, the same institutions that are pushing it down are the same ones that are going to snatch it all back up. They're just trying to shake us out.
They're taking profits and they're going to buy it lower so they can get back up there.
Well, they're trying to get you to sell to them.
Yeah. Well, one thing. Look, I go through the charts myself and I just break them down. And one thing I've noticed with the futures is you're always going to have a high and a low of the day.
Yes.
But
everything's going to have a high and a low of the day. It doesn't matter if it's an option. It doesn't matter if it's a security, an ETF, an ETN, an index, or whatever. Even the dollar has a high and a low of every day.
Yeah, that's true.
Okay, because that's what's called the daily candle.
Yeah. Well, and that's funny because the U.S. is down, but I saw a report where they're saying the dollar's up as far as anyway. I don't want to get into it, but man, what do I need? If I got $250, $300, $500, I mean, could I easily double that in a day?
Doing what?
Doing like your system.
Yeah, you can if you're careful. I mean, it takes me a while just to double 27K. The fastest.
It don't look like it, man.
Well, the fastest I've done it was 3 days, but that's lightning fast. But I mean, if you can do it, if you're in the right product.
Yeah. Well, and that's why I like you in the SPY, the QQ.
But
I mean,
keep in mind, you could lose it all. I mean, look at Stu made 140%.
Yeah.
I mean, if you had gone all in, which is not a good. That's not money management. Going all in on one product at one time. That's like. That's like throwing all your chips in on one hand.
Yeah.
Yeah, that's a recipe to blow yourself up.
Yeah. I see what you're saying.
Unless you've got 5 aces. You got all 4 and the wild card.
Yeah, that's true. So well, man, I mean, like I said, I just these things keep rolling in my head. The 10-minute uptrend, you saying this, I mean, it's a blessing, man, because hearing it over and over helps you get better.
Yeah, you can trade a 5-minute uptrend too, but I like the 10 because it lasts longer.
Yeah,
and that's the whole trick, is to find something that lasts longer and goes further. So it's, there'll be days the 10-minute trend doesn't go far at all. And then there's like today where once it gets started, it kept going all the way into close. It started at noon and I said, hey, there's a good chance this thing runs all the way up until close. 4 hours is a normal time for that 10-minute uptrend to run.
Wow.
It's like the Energizer Bunny. It just goes and goes and goes.
Yeah. What are other things you think I need to be successful? I mean, what are things that you had to work on yourself that made you successful?
The best thing is to work on your weaknesses, and I don't have anything to go off of because I don't have any trades to look at that you've done to see your weaknesses. And you're going to know your weaknesses because it's going to be a trade that didn't work out.
Well, I mean, look, and that's where between me and you, futures kind of suck because the weakness is you put it in there and it may go down and stop you out and then go up eventually your way.
Okay. All right, but the point is did it break the rubber band candle?
Okay, what's a rubber band candle? That's where I'm a little lost. I mean, Craig knows what it is, but he doesn't explain things well. What's a rubber band candle?
Okay, do you have kids?
Yeah.
You do. You
Yeah.
you you ever think about teaching your kids? It's a paper account how to trade
Yeah. Yeah. Yeah.
because
For sure.
have you
When
ever
they get
thought of
older.
that? I mean, because
Yeah.
I mean, you're learning. I don't know what age you are, but anyways, I mean, think of the age you're learning, and
Uh
think
huh.
of how dangerous your children would be if they had this skill when they graduated.
Oh yeah. I tell them all the time. I'm learning this so I can teach it to you guys.
That's right. Well, okay, so the point is start teaching them and you'll know what you don't know because they'll ask you
Uh huh.
questions on what to do here and what to do there. And when they ask you and you don't know, you're going to figure out I don't know this. This is
Yeah.
something this is one of my weaknesses. I need to, you know, study up on it. You know what I'm saying?
Yeah, and that's the rubber band candle aspect because that's I've been meaning to ask you that for a while. I'm
That's
glad you brought it
okay.
up.
Okay, so the rubber band candle, all right, I'm just going to do a little screen share here. And tire window, let's go with this one. Little screen share. Okay, now I'm going to drag something in there. I'm going to show you this so you know where to find it.
Uh-huh.
See if I can drag it up there without messing anything up. Okay, BYOB right here.
Uh-huh.
Can you see the BYOB Trading Room right now?
Yes, sir. Yes, sir.
Yeah, it's not on. So we go over here to notes. See notes?
Yeah.
And then you come down here to education.
Okay.
And I got all these new terms right here. I put those in for yesterday's open house. What is day trading? Trading in general. They're
Yeah.
all helpful to help you understand. And then there's the rubber band candle and the spike candle and the point of interest. And all of these three work together.
Okay.
All right? You can't have a rubber band candle unless you have the spike candle.
Okay.
And you can't have the spike candle unless you got the point of interest. And most oftentimes, the point of interest is VWAP.
Yeah.
Okay, now when the spike candle does happen, it usually comes from the south and spikes up, all right, into the north. Okay, picture the VWAP is like the Mason-Dixon line. Okay, so price spikes from the south through the Mason-Dixon line up into the north. Okay, so now then the rubber band candle, all right, is going to be the free floating candle. Okay, the bullish rubber band candle, which will be in the north. Okay, it always is in the north. The bullish one. Okay, so it's always in the bearish one will always be in the south. Okay, so in other words, when price comes from the north and spikes through the point of interest, VWAP, Mason-Dixon line, okay, into the south, then that will be the bearish rubber band candle.
So you're talking like what do they call those things? A hammer?
No, it's a candle that intersects VWAP. In other words, it goes from one side. There's going to be a piece of the body and a tail underneath it, and there'll be a piece of the body and a wick above it. Okay, so it'll be the biggest intersecting candle. That's the spike candle. Once you've identified the spike candle, okay, the rubber band candle is the free floating candle that surpasses the spike candle.
Okay.
All right. So
can you give me like an example?
Absolutely. We got one for today. Okay. So let's minimize this. Let's look at today's price action. Okay. On the 10-minute. Actually, we'll look at it. Let's see what it looks like on the 5. Okay, so we'll look at it on the 10, all right? Or actually, we can look at it on the 10 because we use a 10-minute chart. Okay, so here's our 10-minute chart for the day. All right, right here.
Uh-huh. Uh-huh.
Okay, so here's the spike candle.
Uh-huh.
Now this candle right here, it's not free floating. All right, let's go to.
Why is it not free floating? Because it has a wick?
No, because it's still attached to VWAP.
Ah, okay.
Yeah, it's still attached to VWAP. You don't want them when they're attached. Free floating means it's not touching the point of interest by either the body, the wick, or the tail. Okay?
Uh-huh.
Not by the body, the wick, or the tail. So we're going to zoom in here so you can see. And I'm going to spread this way out. All right, then we're going to pan over. Okay. Now this would be our big spike candle.
Okay.
Or it could be this one, okay? Notice how there's a big tail, or excuse me, a big wick up above, and a piece of the body. Same with this one, either one. There's big wick and a piece of the body. And then underneath VWAP, which is the burnt brown line, all right, there's a piece of the body and some tail down here. Okay, so now notice this one, okay, just comes from up north through the point of interest, which is VWAP. And now the next candle, notice it's still attached.
Yeah.
You see that? It's still attached. So we cannot use that one. This one, you can see right here, there's daylight between that wick, all right? And this and the VWAP line. So this is our free floating rubber band candle right there.
Okay.
Now the reason of calling it the rubber band candle is like you take a rubber band, you put it around your wrist, all right, you pull it away, all right, and and let's just say the energy in the rubber band pulls your finger back towards your wrist, right?
Yeah.
Okay, well, it's the same concept, okay? Unless, of course, you break the rubber band, all right? And in which case, now your finger can completely separate from your other hand, okay? Or from your wrist, okay? So here it is. Price, because they didn't break the rubber band candle, and that would be a candle closing below the low of the rubber band candle. Notice they didn't close a candle down here, okay? Price is recalled like a rubber band, and the elastic snaps price back to VWAP. You see?
Yeah.
That's why it's called the rubber band. It's the free floating one that surpasses the spike candle.
So when you say does it break, that's what you mean. Does it surpass it or does it come back?
It's got to surpass it. Yeah. You want it to surpass that, and then it's broken.
And this one surpassed it, but it went the other way, so it kind of showed.
Right. But I mean, it didn't close.
Yeah. You want to close. Yeah, that's.
Yeah, you want it to close down here, but it couldn't. It didn't have enough energy, bearish energy, to close down here. Consequently, look what happens. Price is recalled back to VWAP.
All right, so in this case, where would you look at? You would look at this and you'd wait till it comes back up to 3 and then comes back down and validates it?
I would look for, see this, higher low. And then when price clears that candle right there, that's for me. Then we're probably going to have a 10-minute uptrend that's going to run until close. And look at that 10-minute uptrend. See this? It ran all the way from noon till the end of the day. Exactly what I said this would probably do.
All right, so you're going to wait for it to,
make the higher low. I mean, where am I going to enter? You can see where you can see where I entered. We can take a look at my 650 calls, and you'll see exactly where I entered.
Okay. So you're gonna wait for it to do a higher low.
I'd like to wait for it to do a higher low or break the bullish rubber band candle. But for me, it makes a higher low, and then I get green erases red. Okay, that winds up being fine. So you can see right here.
That's a rubber band candle right there, right?
Yeah, right there, right there.
Okay.
But this is one. This is the one, the Mac Daddy of them all.
Yeah.
Notice this is an exhaustion candle. Okay, from the high.
Yeah.
To the low, this is the biggest red candle at the end of the move, right into support.
Yeah.
All right. See
the
how
bears are trying to bring it down, but they get exhausted.
Failed. Right, and they fail to make a lower low, a significant lower low. They may have hit it by pennies, but all in all, they failed to make a significant lower low. See right here, there's a low, there's a low.
Yeah.
They failed.
Yeah.
Okay, so what happens? The bulls buy it up. We get a pullback. It's a higher low. At that point, I said, I'm going to be buying some 650 calls. And I start buying. You can see, there's my first one. Bought 100 at 15 cents.
All right, so you buy them down there and you wait for them. Okay, so you're...
Because my stop, Kevin, is going to be like right underneath that candle.
Okay.
Now look at what happens when I buy it. When I buy 100 here, okay, I buy 100 right here at 15 cents. Look what the option does. It pulls back all the way to 11 cents.
Wow.
9 cents right there. See that?
Wow. Yeah.
It drops all the way to 9 cents, but yet price. Look at what price is doing. Price is moving up, but the option's still dropping down.
Yeah.
So I'm bettering my cost average by doing that. So I'm still in it. Instead of getting shaken out, I'm getting more.
Okay.
So I'm loading up. Actually, the low is 11 cents. You can see.
So it's cost averaging. You're getting.
Yeah, exactly. I'm lowering my cost average, by buying some lower here.
Okay.
But after I bought them right here, you can see immediately I can start farming them out. So I bought them for 15 and I'm selling them for 18, 19, 20. 18, 19, 20. 22. 22. Okay, and then I'm reloading again. And then I'm selling them off again because I bought them for 9 and 11 cents and 12 cents. So now I'm selling them off for 14.
So you don't need them to go to 650. You just need them to go up a little bit, and then
I just need them. Okay, for me to make money, it costs me 50 cents to get in, 50 cents to get out. So if it moves 2 pennies, I make money.
Perfect.
And you should know that what it takes for you to make money.
Yeah.
How much does it have to move for you to make money?
Yeah.
Okay. Remember, I'm doing a lot of contracts here too.
Yeah.
I'm not doing like one. I'm doing 74, 10, 10, 10, 10. You see?
Yeah. No, and that's where I see with options, you got to get ideally 10 options. 10 contracts is good because with 10 contracts, if it moves 20 cents, you made $200.
That's right.
So I'm seeing where loading up on contracts is better than buying. Loading up on contracts is better than buying, like you said, one big one. You need to go $2 to make the same amount of money.
That's right.
And then you're buying low, selling high, buying low, selling high.
Always selling 2 cents or more over, okay? Because that's what I gotta. That's how I make money. All right. If it costs me 1 penny every time to get in and out, if I do 2 cents or more, I make money. Now I like to wait and do like 3, 4, 5 cents. Okay, but that opportunity doesn't exist immediately. It takes a while for that to build, And you can see now I'm selling them up here for 43 cents, 42 cents, where I bought them at 15 down here, or 17.
And you're manually selling those off, or you got orders?
No, I got my grid, my net of sell orders up there. Price just runs into it.
So you'll buy something, let's say you buy 10 contracts at 15 cents. You say, I want to sell these at 30 cents, 40 cents. I
try to get them to sell at 30 cents, but sometimes if nothing happens and it moves up to 25 cents, I'll sell them.
Yeah. Right?
With the hope that if it pulls back, I'll reload it.
Yeah.
Okay? You got to remember, the day is not promised. So when you want it to hit a goal and you have a number in your mind, you may not get that number. Yeah. So for me, if it looks good and it smells good, I'm going to take it with the hope of getting reloaded.
Yeah, you're just trying to buy low, sell high, make a small profit, reload, buy low, sell high, make another profit.
Always keeping a reservoir of something in case it does take off and give me this rip that goes from 22 cents to 42 cents.
Yeah.
All the way up here, okay? Got to keep something.
Yeah.
All right? Otherwise, if you're all out when it runs to 42 cents, okay, well, you're not going to have anything to sell. It's like selling all your bicycles in spring and you got nothing to sell in the summer. But you know what I'm saying? If you owned a bicycle shop.
Yeah. So you're putting orders in there, but if they don't meet your orders, you'll just sell them whatever the market is.
Well, I want to sell them for more than 2 cents. I'd like to get 5, 6, hopefully 10 cents.
Yeah.
All right. But if the market's moving slow, then that's okay. I'll move slow too. I'm fine with that. I'll just leave my orders out there to sell, and I'll work on another position while I'm waiting for.
So you're just looking at the option chain, and whenever the option chain's going up, the option candles. I mean, Craig's like, I never seen an option candle until you. When you see the option candle going up, that's when you'll hit the sells, or you have predetermined orders.
No. Okay, I'm looking up here.
Yes, sir.
See the 10-minute uptrend?
Yeah.
See how it stays intact?
Yeah.
Okay, so now all I do is you'll see me, I spread out. You'll see a grid of red sell orders up top. So I fan those out up above my position. And then I fan out a grid of blue buy orders underneath my position. So that when price moves up, in other words, that option candle, it runs in and fills my order.
Okay.
I already have it laid out. It's like putting a net, okay, along the shore. And all you got to do is wait for the fish to run into your net.
Yeah.
And then you just drag it in, and there's your haul for the day.
That Cajun Navy stuff, right?
That's right.
Okay. So just so I make sure I'm following, because sometimes I'm slow, is you're putting in the orders on the bottom, and then you're putting in some sell orders on the top. So you'll buy them down there, and then when they go up, some will sell automatically, some won't.
Right. I want to sell some off. Okay, I don't want them all to sell off because it's still young in the day. It's noon.
Yeah.
All right, and okay, I don't want to sell everything. All right, but I do want to sell as much as I can for as high as I can. Okay, but sometimes the high might be like 22 cents. All right.
Yeah.
Okay, because it's not going to be. It's going to take time for a price to move from 648.50 up to 650.
Yeah.
All right. The closer it gets to 650, the more valuable these options are going to become.
Yes, sir. Yes, sir.
So I'm going to try to keep some, but I also want to sell them for as much as I can. I don't have to sell. I could just hold it.
Yeah.
I could hold the whole position until I see this and then sell the whole thing there.
And then you're also protecting yourself in case the market switches. As you said, nothing's guaranteed. So if the
Right.
market switches,
But
you've already sold.
right, this
You're
candle right
profitable.
here where the price goes all the way up like that,
Yeah, yeah,
that's not guaranteed. So
yeah,
I'm going to like snatch some profits
yeah.
while I'm waiting for what I want to see, which is this or
Yeah.
this right here. See that last candle of the day? Like that
That
is
was
what I
good.
wanted. Okay. I didn't get that, but I got something pretty close right here.
So let's say you would buy 20 and you would sell 10 and you would keep another 10 to run and see what
I
happens.
try to reload the other 10 lower than what I sold them for. Okay, so let's say I sell them for like, 2 at 17, 2 at 19, 2 at 21, 2 at, 23. Okay, so I try
Yeah.
to reload them at either 18 or 17. Okay, or lower. Okay, whatever I sold, I try to reload at a lower price.
Yeah, that's what I was trying. I was trying to do that with futures. But
You can do it.
options options are just safer, man.
Not really. Options options are totally dependent on the underlying security. Same thing as futures, though. They're totally dependent on where the SPY goes. But I mean, on futures, like you said, they can just keep dropping. Whereas the
Yeah,
SPY, whereas the option, it's
it's
40
defined
cents.
risk.
Yeah, it's only going to go to zero.
Yeah,
Okay.
perfect. Um, let's see. You just loading, unloading, loading, unloading. I was trying to do this with futures yesterday, man. I was doing really good at first, and then I don't know what happened. Um,
You got to find the trend.
yeah,
And the hard part is they don't have a trend sometimes, especially in the after hours.
yeah,
Like in the Asian session at night.
yeah,
I mean, that thing is like super sloppy. You know what I'm
yeah.
saying? Like, I mean,
It's so low
it,
volume, you'll get
it's
taken
like
out.
way out of line,
Yeah,
but it's super sloppy. So, for me, it's easiest when you see the tight trend right
yeah.
here. That's what you want to find. You got to find a way to find that trend in the futures. Sometimes you have to move to the bigger time frame.
Well, and that's where the 3/8 and what you're doing is helping me understand the trend more.
Yeah,
And if
well, you
you
might have
up,
to go to like the 3/8 on a 30-minute chart to
yeah.
find the trend
Okay, okay. And
in the
then what I'm
futures.
trying to do is find, like you said, buy out of the money and cheap.
Yeah, on futures, there's no out of the money. It's either
Yeah, yeah, yeah. With options,
it's
yeah,
low or high.
yeah. That's what I'm trying with, because and you're kind of. I mean, I don't know this much about it. Craig tells me gamma. Yeah, gamma will go, as the price goes up. That's where gamma, and that's kind of what you're doing is you're selling based on, because the gamma's making the price go up. I guess whatever. Blah blah blah.
No, gamma doesn't make the price go up.
Oh, it doesn't. Okay.
No, the underlying security,
Okay.
that's what makes the price go up.
Okay.
All
Wait,
right?
wait.
The fact that this is moving up and it's in a trend, that's what makes the price of your option move higher.
Okay. Okay.
And that's why you want to find a trend. That's why
Okay.
just buying aimlessly doesn't work. You want to find the trend. That
Yeah.
way you can just slip in to the trend and ride it to the top. It's like a chairlift.
So down here, let's say this hammer candle, 3 over from where you're at. The other one, the one going up. So on this one, you would buy 650s down here at a cheap price because they're out the money, and then you would just ride the trend up.
Right. That's what I'm doing. Yep. See the dots. That's a buy.
That's okay. So you're not okay. Okay. So here's where I'm kind of getting confused. Just correct me, slap me around, whatever. Is you can buy. You're putting a limit order in at the price you want to buy, but you're not putting a limit order at 650. You're putting a limit order down here for 650 calls or puts or whatever, right?
For the calls, not the puts.
Yeah, calls there.
Yeah, I'm putting a limit order.
You're putting a limit order for 650, even though it's down here, right?
For the 650 call option, yeah. You can see I bought 20 at 17, 20 at 16, 20 at 15. So that was me. You can obviously see I put in a order.
Yes. See, that's where I was getting confused, man. I put a limit order at 650.
No, that's to buy the
option. That's where I was messing up, man.
That's to buy the contract. The price of the option is down here. You see how it's selling for 14 cents a share.
Okay, so I got to figure out how to put the limit order down here for 650 per se in this example. I'm not
right. Well, you gotta pull up your option in your option chain. All right. You got an option chain?
Yeah. Well, I have access to this TC2000. I haven't used it. I've been a little busy, but
okay. You gotta get the option chain. And then in the option chain, you want to find the option that you want to purchase. And that for me, it was the 0 DTE 650 call.
Yes, because
and then you got to set your chart up so that it plots the underlying security, okay, on the top and the option on the bottom.
Yeah, I think I was playing around with. I think I got it, but so
if you got TC2000, do you have gold or silver?
Yeah.
All right, so
I got the lowest one, but I think I got to go up to the next higher one for the drawings.
Well, you can just take my layout. I can share it with you.
Okay.
All right, and then you can import it. It's creating a link right now, and it already has this on there.
Okay.
Copy.
Yeah. Because what I made a mistake. I was thinking you'd put a limit order at that's why I was talking about. If it goes up, it's gonna get stuck there. So you're not putting a limit order at 650. You're buying down there for 650 up.
No, I'm not even buying a limit order for 650. I'm buying a limit order for a 650 call option.
See, that's where I got a little confused. Okay, yes. Thank you, sir.
Yeah.
Okay. Because I mean, look, you blew my mind, but you really blew Craig's mind when you said out the money and cheap. His mind was blown because he's been listening to everyone saying you got to buy in the money calls and in the money options, blah blah. He was in utter shock, dude.
Oh. So that's not how he was trained?
Because he was trained the exact opposite.
Right, but for me, I mean, you can buy in the money, but you're risking more.
Well, that's why I'm saying his mind was blown, and it helped me understand it more because what he was trained to do opposite of what you do, but he can't argue that you're making money doing it your way, and your way works better.
I mean, you're okay. Here's the bottom line: you're going to get greater performance out of an in the money option.
Yeah,
that's the truth.
And out of the money or in the money? I'm sorry.
In the money option, 0 DTE. That will give you the greatest performance.
Yeah.
You will get darn as close as you can get to penny for penny performance. In other words, the underlying security moves up a penny. Ideally, you want your option to move up 1 penny. Right? Okay, so now this, keep in mind, okay, I'm buying them at 15 or 11 cents.
Yeah.
Okay, price moves, okay, from 648.17, and let's take the top of this candle, 648.73. So that's 60 cents. Okay, and price doesn't move penny for penny. It only gets as high as 22 cents from 15 cents. So it only moved 7 cents, right, Kevin? Okay. Yeah. Whereas the underlying security moved from, let's just call it 20 cents, all right, 48.20 up to 48.74. All right, so that's a 50 cent. That's a 50 cent rise in price, but I only got 6 cents of that.
Yeah. But you're buying in bulk, so it kind of compensates, no?
Yep, a little bit. It kind of does compensate a little bit of it, but I mean, and I say this in the morning preps, is that if you want that penny for penny performance, okay, you can get in the money 0 DTE, but they are highly volatile, and you're going to have more risk. Okay, now keep in mind that in the money option is going to cost you more, because the performance is almost 1-to-1.
Yeah.
Okay, so it's going to cost you more, because the performance is going to be better.
Yeah.
All right, so there's nothing wrong with what he's doing. But for me, I like to risk less.
Well,
all right.
Well, and he said this. I don't know it. Like I said, he says you can buy in the money and they can go out of the money.
Yes, and you can buy out of the money and they can go in the money.
So that's what I'm saying.
That's what we're gearing up to do, is buy out of the money and have it go into the money. See where it's now up here at 651. Okay, now it's a 650 call, so it now holds intrinsic value because price is currently trading at 651. So it's worth, you can see, 96 cents a share now. All right,
so
because of the intrinsic value.
If you would have had 10 contracts there, you would have made 2,000, right?
If I had what?
If you had 10 contracts at 649, it went up to 651.
Right. Okay. If I had 10 contracts, let me just grab my calculator. Okay. And let's just say I got them at, okay, what's this? 15 cents. 15 cents. Okay, so that's 15 times 100. All right, that's 1,500 right there. That's how much it's going to cost me to buy those. All right, now if I have all 10 contracts and I sell them for 96 cents, because price is now at 651. Okay, so now I take 15 times 100. All right, it's 1,500. Okay, now times 10 contracts times 100. Okay, 10 times 100 is
1,000.
1,000. Okay, times 0.96. All right. It's going to give me 900. Hold on, that's wrong. 1,000 times 0.96 is 960, where the other thing cost me, 10 contracts cost me $15.
Yeah.
You see what I'm saying? So let's say I got 10 contracts. Times 100 equals times 0.15 is $150. So that's turning $150 into, you saw it earlier, $960.
Yeah.
That's like quadrupling your money.
Well, that's when you showed me that time where you were buying contracts for 20 cents and you were selling them for $2. I mean, that was insanity.
Yeah.
I mean, it blew my mind.
Right. It does. It is incredible when you see that happen.
And I told, Craig told me about credit spread, so I asked you about it. I told him what you said about, why would you buy credit spreads in this environment? He agreed with you. He's like, yeah, that's pretty smart. Buying credit spreads here, why would you do that? But I don't know about credit spreads. I don't even care about them right now. I'm just trying to
Credit
learn.
spreads are something that allow you to get paid if the market doesn't move.
Yeah.
All right. So, I mean, you can do a bull put credit spread and get paid as the market goes higher.
Yeah.
But isn't it easier just to buy directional calls?
Yeah.
I mean, wouldn't that be more advantageous to buy directional calls?
Yeah. I mean, I watched a video. I stopped watching a lot of these videos, but one where if you buy a spread or you don't buy a spread, I mean, the money you lose is very minute. You know,
Yeah, it is. When you do a spread, it's very small. If the spread is tight,
yeah, but the money if you just lose the call in this situation, it's just a little more money that you're losing. That why add on more risk? I guess.
it's two positions because it involves selling one
And
put
buy.
and buying one put. So now you've got two positions to manage. It's acting as one.
Man, like I said, I'm just trying. I've given up a lot of these other stuff I was learning because your system is just so smooth, my man. That's it. It's just sometimes I get lost because it's a lot
Well,
of learning.
well on my system it's imperative that the 10-minute trend rises too. All right,
Yeah,
if it's just catatonic flat, it's it doesn't it does us no justice at all.
yeah, yeah. And what do you look at? What do you look at for the rise? I mean, there's a bunch of things you can look at, but what's the most important that you look at? The three?
Well, I mean, I can't. I don't know what it's going to rise. There's no. I can't. I can't even predict it.
Yeah, but
You know, no one.
yeah,
No one. No, I don't know how fast it's going to rise.
yeah, yeah,
Or whatever. Okay, it's up against resistance. It's grinding through it, and you see it breaking through to new highs all the time.
I mean, do you look at like because you can look at the slope of the VWAP, you can look at a 17, you can look at an 8, or you can look at 3. Do you think one is more important than the other?
No, no, they're all
Okay.
equally important.
Okay.
You just want to see. You just want to see. I want to see. I hope to see price. The price candles and the 3 and the 8 break away from VWAP and put in space between the two of them. I want to see that space grow. But I know when it gets to 650, that's the
Yeah.
big fat whole round number.
Yeah.
That's going to be a speed bump because psychologically, a lot of
Yeah.
people are going to take profit when price gets there. But
Yeah.
thankfully, it's like the third or fourth time we're getting to 650. You can see
Yeah.
we tagged it here, we
Yeah.
tagged it here, we've tagged it here,
Yeah.
we tagged it there. So the more you tag it, you're grinding away at that overhead supply.
Yeah.
Okay, the more often we tag it.
Yeah.
And eventually there won't be any sellers up there, and
Yeah.
price will be free to move.
Yeah.
It's like trying to jump up in a room full of drones,
Yeah. Yeah.
flying over your head. It's not easy to jump up without hitting one. But if you remove once we've removed them all
Yeah.
or eliminated a
Yeah.
big part of them, now price can rise up through them.
Yeah. Well, and like I said, that was stupidity on my, not stupidity, but just what do you call it? Ignorance. Is I was buying a 650 call, but all the way down there, but I put a limit at the 650.
You're learning. That's okay.
You're allowed to make mistakes when you learn. No, I'm just kidding.
Yes, you are. That's the best. You don't learn from your successes. You learn from your mistakes.
I know. I'm just messing with you. That's why I say, I use the saying, you're human, because I make mistakes, man. One time I wrote this lady's insurance, and she called me 6 months later. I found her a cheaper policy, but I forgot to cancel the other policy. And I told her I'm human, and that's why I say, are you human? I said it to Doug the other day, and he's cracking up.
Yeah.
Um,
Doug's very good at spreads.
yeah.
If you want someone to teach you spreads, he is ideal. Now he uses delta.
Look, once I learn your system and once I can get down what you're doing and kind of mimic it, maybe I'll go into something else. But like right now, man, I mean, like I said, I'm just trying to. I really see the benefit in your system because you're using volume to compensate for. Like I said, I see it, and correct me if I'm wrong, but you're using volume to compensate for in the money, out of the money.
Not quite. I'm still keeping my position at 1% or greater. Now it's just the fact is I can use more than 1% now because I've created a buffer. In other words, I'm over my 1% schedule. Yeah. It's like riding in a race and you're way ahead of the pack.
Yeah,
You've got room to play around.
You made 10,000. What?
Yeah. So.
Well, what I mean is that you're buying cheap out of the money.
Yep.
And the thing that benefits you is you're buying like 10, 20 contracts at a time. So you just need them to move a couple cents, 10 cents, 20 cents to really make money.
Yep. Yep. I mean, it's a lot easier to get. It's not easier, but I mean, when you can get a bunch of 10-cent contracts and you can get a lot of them, all right?
Uh-huh.
And if they move, 2 cents, all right, I make money if they move 2 cents.
Yeah.
Because it costs me X to get in, it costs me X to get out, and whatever's left over, I get to keep. Right? Yeah. But I mean, I really rather get the in the money calls, but they are expensive, and to keep my risk at 1%, it's hard to do that and buy in the money calls. If you've got 1%, but now I've got much more than 1% because I've built up a huge lead.
Yeah, and then when you say cost basis, you're just meaning. So you're just meaning. What was that term earlier? I said. You're just bringing the price of the cost of each.
The average cost of what I purchased down.
Yes. So it's costing you less money overall. Okay. Yeah. The cost basis is the.
But in order to bring your cost basis down, you have to buy lower, and not all the time do they give you that lower. You know what I'm saying? That you have to buy lower than where your cost basis is currently.
Yeah.
And they don't always do that. They don't give it to you. And the scary thing is when they do put it lower, is it because the market's rolling over? Is that why you're getting a better price, or is the fact that they're just resting and they're ready to they're going to go back up again, 20 minutes, 30 minutes from now?
So so when you're buying, let's say when you put these buy orders down, you think it's going to go down to this point, so you put these limit orders in to buy 650 call options, let's say. So you just put the limit orders down there so that when it gets to that price, it triggers, right? And then when it goes up,
right, when it drops into my price, I get filled.
Yeah, that's where I got to figure out how to do it, because that's where I'm.
So I put a limit order to buy a 650 call option for 15 cents.
But you're putting it. Okay. And it doesn't matter how much higher, because even if it doesn't go to 650, you're still going to make money because it's going to go up. Based on 10-minute trend.
Right. Because the point is it will rise when the market, but the 10-minute trend has to rise. Okay.
Yeah.
If the 10-minute trend does not rise, it will just decay.
That's your evidence that it's going to go your way.
Right. Well, that's when it's looking good.
Yeah.
When there's still time left in the day, okay? because you don't want you don't want. Okay, you saw at the very end of the day yesterday. Remember that big rally into the end of the day?
Yeah.
Okay, they did the same thing again to us today.
Yeah.
Okay, so you see that rally at the end of the day. Unfortunately, that's kind of too late, but it's not too late for the 1 DTE options because they don't expire at 4:15 today. They happen to expire 24 hours from now.
Mm-hmm.
Okay, but you don't get the performance that you would on a 0 DTE.
Yeah. And why do you like Friday DTs?
I like Friday because it's higher, more open interest.
Okay. More liquidity.
Yep, more open interest is greater liquidity. Greater liquidity means tighter bid-ask spread. You know, because if you go up into some of the in-the-money options, you'll see that the bid and ask spread sometimes stretches out to 4 cents and 6 cents of air between the bid and the ask.
Okay.
I like it when it's like a penny for the buy and a penny for the sell. In other words, there's very little difference. All right, like the ask is 16 cents and the bid is 15 cents.
Okay. Yeah. Blow my mind, my friend. I appreciate it. I appreciate it a lot.
You're welcome. Are you tracking your trades?
Yeah, like I said, I'm trying to get more of your system down. I'm watching you a lot more.
Right.
Honestly, I think I'm gonna give up these futures because I just.
Why? You don't have to give up the.
Okay.
You don't have to give up the futures, do you?
I don't know. I'm just like I said. I'm trying to mimic your system as best. Just to learn, because with everything I've learned, your system is just. How are you figuring this out, my man? You're doing incredible.
Well, thank you.
I mean, you look at YouTube videos and they're all like, buying the money. You're like, how the money is cheap? And I'm like, what? Craig's like, I can't believe this.
Well, I mean, if you got a small account, you can't afford to buy in the money.
Yes.
Right?
Well, and even when you get big accounts, you still buy out of the money.
Right. Well, but the point is, you don't know if that 10-minute trend is going to continue to rise.
Yeah.
You know what I'm saying? Like you look at some of the, the market went up this morning, and then you saw that big rollover into an exhaustion candle. So that hurts if you've got in the money calls.
Yeah.
All right. They're now those in the money calls are out of the money.
Exactly.
And that's very painful.
That's what Craig was explaining to me. It's like, listen, dude, you can buy in the money, they go out the money real quick.
And that's painful. Think of this. If you've got 10 contracts in the money, that's 1,000 shares because it's 100 shares per contract, okay? And you got in the money options. All right? If they drop $1, that's $1,000. Okay? And there's days I can show you days where there's 5-minute candles that are $4 high.
Wow.
So in 5 minutes, $4,000 just disappears.
Yeah.
All right? So that's why I pick out of the money.
Yeah.
Right? You see my
it's
my
more
edge.
safe. It's safer, man. It's safer.
Right. It's
always going in the
right.
money.
You don't get right. That's what I say every morning. You're not going to get the performance that you would from an in the money option, but you're not risking as much either.
Exactly. Like I said, man, I'm just trying to concentrate on what you're doing. I got to put some more money into that Fidelity account. or whatever, and just I'm sitting out there trying to watch and see. Sometimes it's hard to find you sometimes 'cause I know you're doing so many things. It's beautiful to watch you, my friend. It's beautiful.
Well, thank you. I'm gonna wrap this up. Okay, Kevin, have I answered all your questions?
Right now, my brain's fried, so yes.
Okay, all right. We can do it again.
Hey, I appreciate you, man. I really do. I thank you so much.
Well, I want to see you succeed.
Yes, sir.
This is going to be the last job you ever do.
God willing.
When you learn this skill, you won't need another job. If you learn it right, you won't need another job. This will be the last job. It'll still be work.
Yeah.
You got to put in the work. Okay.
Yep,
You got
yep.
to track. You got to track your trades. You got to write your plan. You got to do
Yeah.
all the necessary stuff because it's a new business. It's just like your insurance business.
Yeah.
Okay, but now you're doing something different, so you need to monitor that business so it will improve.
100%.
Yeah. Okay. All right. I'll see you tomorrow morning, 8 o'clock. Okay.
Thank you, sir. Thank you. Have a great night.
Yep. You too. Thanks, Kevin. Bye.